Good day, ladies and gentlemen. I hope we are all good. I hope we are all good. Let's see. Okay. So I wanted to do another quick example of what we read in the candlestick trading Bible. So if you notice, yesterday we had a nice buy setup on gold. I don't know if any of you guys caught it. Today we also had a nice setup on gold as well. So again, before we take a trade, what do we look for? We look for the trend, right? So here are the things we look for. If we get a trend, the next thing we need is a Fibb. Where there is a trend, there is a retracement. So that's where the Fibonacci retracement comes in, whereby we look for the 50% and 61% Fibb retracement levels. Then the next thing we look for is a candlestick or a signal or a candlestick pattern. Then the next thing we want to look for is the risk to reward ratio, then execute, right? So on this particular asset, what do we have here? We've got a trend. Do we agree that here we're pushing up from this low here until we broke this? So price has been delivering higher highs, higher lows. We went a little bit of sideways, but that trend continued, right? So once we figure out the trend, the next thing is we need to pinpoint what price is doing. So the day before yesterday, we had a nice push up. Let me remove this. We had a nice push up from this low here. We broke this level here and we created this high here, right? So from here to here, we ran a Fibb and we got this entry here. Again, from here to here, we run a Fibb and we get this entry here. So again, I think I forgot to mention support and resistance. So on this particular setup from yesterday, after running a Fibb, okay, I'm going to quickly run the Fibb from this low to this high. Then we extend it into the future. So what you will notice is price actually started retracing right here, right? So we ran the Fibb. There was a buy entry here. An early buy could have happened here because we had a nice pin by candle here. But if you're trading yesterday, you would have noticed that price came, didn't break the high, right? So this whole range is still active, is still valid. Look to your left, we've got this low here, which was broken here. If you extend it into the future, that's where price go to. That's the other thing. So after running a Fibb, price comes into our 50 and 61.8 range. The only thing we're waiting for now is a nice pin bar or a rejection with session timing, depending on whether you trade in London session or you trade in New York session. So this particular move, I think it happened right at the session crossover when New York session was about to start. Nice pin bar, and this was just like a 1 hour trade, because within an hour this price it actually moved. And if you were to map out a 1 to 3 trade, let's see if your entry was even above here with your stop loss below the pin bar. 1 to 3 was actually somewhere here. So this trade was complete right there. It was a quick trade, right? So this is another clean example of how to apply what we learned in the candlestick trading Bible. So the next thing is yesterday price created another impulsive move, which was the trade we took. Extend that into the future. What do we get? So if you extend it into the future, you notice that price also did same pattern as the previous day. They came towards the high, then retraced into our zone. We came and tapped into the 50 level. This is London session open. Once you understand that when the major markets open, there is volume in the markets, you know that, okay, this is my time to trade, this is my time to execute. So how do we go about this setup? It's either you trade after the bullish engulfing. So this particular example had a bullish engulfing candle. So we went from a pin bar to a bullish engulfing, right? So once you map out, you see your bullish engulfing form and close, enter your trade, stop loss below that bullish engulfing. You map out 1 to 2 or 1 to 3. So 1 to 3 will be somewhere here. So we'll see if this plays out, but for now it's almost at 1-to-1. Maybe for early entries, again, depending with your trading style, you might want to enter a bit earlier. If you know what you're looking for in the markets, it will be a bit easier. But then this is still the trade. Then if you notice we've got a broken order block here, that's another different strategy altogether. So price might actually retrace, then push up to the TP. So I thought, let me quickly share these examples, is they might help you through your journey as you go through that book. So again, sometimes you might miss these trades depending with what you trade. So as I scalp through my watch list, I just noticed, okay, gold actually played out. But on my side, I didn't catch this because I was trading something else. But this was a clean textbook examples. This is clean textbook examples back to back. So this is Thursday. This is Friday. So even if you don't trade Monday, Tuesday, Wednesday, that's fine. You still get a nice trade here. Depending with your risk to reward, you can still have one trade, call it a week. Another trade, call it a week. It all depends on your trading style. But the fact is the setups are there, and these are clean examples coming from the Candlestick Trading Bible. So I hope this helps. You guys can continue back testing, forward testing, and you can share your journey as well in the comments. Tell us how you're doing. Are you finding these setups? Is it easy for you or is it hard for you? If you haven't gone through the book, you can start from the first page, go through it, because now I'm just posting examples since we've finished the book. The next book I'll be doing is dropping soon. Let me actually show the highlight because I got permission from the author. Let me quickly show you the book. The next book we'll be doing, new share. Okay, this is the next book we'll be doing. It's BTMM versus ICT order blocks. This is mainly about order blocks setups using BTMM and ICT combined by this gentleman here. So I spoke to him. I got permission to do the book. I will be dropping it probably from tomorrow. I'll see. I'll get started with it. It's a very short book, but it's packed with information. It's packed with information. And it starts from the basics. It's about 20 pages, only 20 pages. So we'll go through it quick. And I'll send links to the author's group as well because he's got his own channel. And I'll send you links to him in case you want to get in touch with him. I'll also send through the link. So this is our next book. If you need this book, it's posted on our Telegram group. So just get into our Telegram group where we share synthetic signals. You will find it on the files, BTMM versus ICT. That will be our next book. So apart from that, I hope you guys had an awesome trading week. Have a safe weekend. Good trading.